Financial Survival Network, helping you survive and thrive in the new economy. Go to carrylutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network, and it's been quite a week. Friday, March 2nd, we've seen unprecedented manipulation and intervention in the gold and silver markets and others. We've got somebody to explain it to you. Not that we haven't tried before, but Ty Andros, he's extremely well situated to give you the true story. Ty, welcome back for another market wrap-up.
Good to be here.
Hey, so briefly, what happened this week?
Well, I'd like to talk about 4 or 5 different things. I'd like to talk about the LTRO. I'd like to talk about the credit default swap market, the TIX data, the stock market, Spain, and I'll call it the Bernanke blast at Ron Paul. And we'll start off with that. And, Bernanke was doing his year-long Humphrey Hawkins testimony, and Ron Paul was sitting there calling him in polite terms, a liar, and holding up silver dollars. and then you saw a little bit of a wry smile, and it looked like a little nod of the head.
Right.
And within 3 minutes, 31 tons of gold, over 3 million ounces of gold hit the tape in London. And, actually today's Gartman letter has a nice little note that he got from one of his readers and clients, and I just want to read it just because it's so interesting, and then I'm going to go to silver. But anyway, Dear Dennis, hope you're well. Regarding yesterday's action in the precious metals, I have a different take on this than you do, as I have very intimate details of yesterday, and I think it was indeed official selling at the London Fix. An order came in to sell 3 million ounces of gold, and it was explicitly ordered to be done in just a few minutes. No investor or speculator would handle it this way and do it at the fixing only. This has happened this way 3 times in the last year, yesterday being the 4th time. Ben Bernanke done nothing yesterday to trigger this the way it happened. I have done this now for 30 years, and this was no free market yesterday. We will find out one day. All the best. And Dennis just kind of backs away and says, the guy's not prone to hyperbole, but he's not even going to comment. And then, going to silver, the same thing happened, but it was even more gargantuan. They sold 225 million ounces of silver. It was 45,000 contracts. The initial margin was 832,500,000. Each tick was worth $2,250,000. The approximate open interest in the COMEX in silver is 57,000. And the approximate daily trade volume is 45,000. So they unloaded a whole day's worth of volume in 3 minutes.
Mm-hmm.
Okay, and, Kerry, we were talking before that the open interest didn't explode, and of course not, because it was done in London.
Mm-hmm.
And so it was done in a market where London is really more and more turning out to be a real, terrible bankster market. It just, it's where MF Global went to escape hypothecation rules because there are no limits on rehypothecation in London. It's the seat of the credit default swap market, and of course,
and AIG. Don't forget them. That's where they lost all their money.
Yeah, but we had some other things happen in London this week, and that's the International Swaps Association.
Sure.
And they voted to say the Greek situation was not a default. And of course, it was a unanimous vote. Unfortunately, of course, the people that were doing the vote are also the people that were being, they didn't have to pay off on their insurance.
Right.
Because, most of the swaps market carry are, I'll call it unmargined insurance policies. And of course, that's where the big banks write these things to their customers with no intention of ever paying off, with no margin, set aside to meet obligations if they're wrong. They're over the counter, so there's no marketplace to go really offset. But, I think that ultimately, if those credit default swaps are no good, which ones are? And I'd have to say that none of them.
I did a piece on this a while ago because Jim Sinclair was making a big deal that they're going to meet and they're going to eventually have to proclaim that some country or such is in default. And what I said was, like what you just said, there's never any intention to pay these things off. All right, the only ones that ever paid it off were AIG, and when that happened, it was the U.S. government backdooring bailouts to Goldman et al. And these things are a pure scam. They're never going to be paid off. Period.
Well, it was a who's who of the big banks that voted to say this wasn't a default event. It was J.P. Morgan Chase, Goldman Sachs, Barclays. It's all the who's who of international banks. And, of course, they're the ones that would have had to pay off. So it's easy to vote when they're sitting there saying, oh, we wrote you an insurance policy, but it's no good today. And, of course, the rule of law just flies out the window.
But you think we have a rule of law at this point? It seems to me that it's the financial law of the jungle, and the big majors make the rules and break the rules at their convenience, and this is yet another example, another instance, right?
Well, just like the founder of the Rothschilds say, if I control the money, I don't care who makes the laws, and that's where we're at today.
It's very disconcerting because we talked about last week how they've rewritten the rules of sovereign debt in Europe. And just like they rewrote the rules of debt, private debt in the U.S. when a certain person became president, then it was okay to subordinate all the creditors of Chrysler and GM to the government. And that had never been done before in the country's history. And here we are, none of it matters. So we're just going to see more and more of this, right?
Well, yeah, and we really saw, there's some interesting news when it comes to GM this week, and that they showed the year-over-year car sales, and the only company that didn't have growth was GM.
Wonder
and
why.
Of course, and if you really actually knew how many cars they have on dealer lots, which they've called sales.
Yep.
They've loaded up their distribution channels.
Sure.
So not only have they wouldn't have had any growth had those not been counted as sales.
Yeah.
In fact, it would have been plummeting. And, GM is still the same dead man walking it was before bankruptcy.
Oh, sure.
Because they didn't get rid of the unpayable defined pension benefit programs. They didn't really get rid of any of the liabilities. They transferred the ownership from the secured creditors to the UAW. Of course, as a big payoff. It's just corruption run wild in the United States, and we just see more and more of it every day.
Exactly. That's what it's all about. And people hopefully are waking up to this, that we no longer have a rule of law in the country or the world. And just like MF Global, when there's no rule of law, then anything you have could be taken from you at any moment. And that's why you need to be thinking of where to put your assets so they're away from the long arm of the law and the long arm of the banksters, who their main thing is they're in it for themselves, and you, the small investor, the public, be damned.
Oh, MF Global. There was a lot of news on MF Global this week.
Yeah, I saw that.
The whole thing is, they were knew already that they were going to go bankrupt,
Uh-huh.
and they were sending out money to banksters to make them whole.
Yeah.
Um, fully knowing that there was no coming back.
Mm-hmm.
And they took it into the type of, now it looks like J.P. Morgan Chase got, I don't know, $600 million of the missing funds.
Yep. And there used to be a thing, a maxim of the law that a thief could never pass good title. I would argue that MF Global was acting as a thief at that point, stealing the money.
You can pass it. They can get good title if they don't have knowledge of it.
Yeah.
Okay, and so, they're hiding behind that, but there's also emails saying, this isn't client funds, is it?
Yeah, and there was a guy.
Well, they knew at that point, how can you deny that you thought it was client funds? And, when it was wired out of the wrong account.
Yeah.
Let me just say that, the banks, if they send you money wrongly, they can get the money returned by rescinding the wire.
Yeah.
Okay, I mean, like, Kerry, let's just say that you and we were sent $165 million into our bank account by accident.
Mm-hmm.
Do you think we'd get to keep it, or do you think we'd be made to send it back?
And if you take it, they put you in jail. I've seen it happen numerous times. Bank error in your favor, you spend the money, then they discover it 6 months later, a year later, and you go to jail because you didn't pay.
Well, unless your name's J.P. Morgan, right?
Yeah, or whatever. I mean, it just...
And, it was such chump change.
Yeah.
Okay?
Mm-hmm.
It was such chump change for these guys. I mean, it just... it never ceases to amaze me what's going on. But
I know, but that's... we're living in lawless times, and that's why you need to take steps to make sure your assets are safe, your family's safe, and you've got plans in place so when it all hits the fan, you're ready to act and you're not worrying about what I'm going to do. So it's really problematical. Anyway, so we're watching Ron Paul, kind of tweak Bernanke, and...
Well, but I really want to interject that anybody that can read a chart, this bull market in gold and silver are really right in the middle of their, the meat of the move.
Sure.
But I can point to half a dozen times in the last 10 years when gold and silver went down to sideways, and those are called long-term corrections. Those are called cyclical corrections and secular bulls.
Right.
And to put a perspective on it, silver has been correcting since May of last year.
Sure.
So it's been in a downtrend, and on a slow stochastic or MACD or whatever for 10 months, and in the case of gold, it's since last August. And so to be really kind of leaning on the markets after they've become so oversold and they've cleared out all of the weak hands in such a thorough manner is probably not well thought out. And my slow stochastics are giving buy signals on gold right now.
Yep.
And in silver as well. And even after the interventions, gold's up 10% this year and silver's up 25%.
Amazing.
So, you really can't say that a whole bunch of damage was done here. It just they're standing. It's like sitting in front of a tsunami. The momentum is done on the downside. They really have gotten all the weak hands out, and the people that are in there are like, pit bulls. And got their
buying.
teeth.
And they're buying when these hits happen.
We can look at daily charts and we can look at weekly charts, but those monthlies tell a story of don't stand in the way of this because the next leg is commencing right about now.
Yep.
So
desperation move for sure. Just a desperation move.
225 million ounces. That just is inconceivable.
Yeah.
or
Yeah.
or 30,000 contracts of gold, and then to do it in London, where you're outside of the CFTC, you're outside of the reporting, you're outside of
Hmm.
everything. I mean, London is really a cesspool of banks,
Yeah.
and now we know that governments are using that cesspool to screw the private sector, citizens, you,
Ain't
me,
that the
everybody.
truth? Yeah, it's really sad. Very, very sad. But that's the world in which we live, and it's if you've got some liquidity, you can protect yourself against a lot of it. But you got to do it now, because later on, it's going to get harder and harder to do. In the same proportion that the more they do, the less effect they get in the markets, it's the inverse that shows that you need to be doing it now and not later. So what's next on the agenda here, Ty?
Well, let's talk a little bit about how they're gearing up. The Fed bought a whole new building for Markets Group. The markets are, heavily leaned on, but they just don't have enough people at different screens to manipulate it enough. So they've bought a whole new building to put in, Plunge Protection Team and, exchange stabilization funds and everything else. A whole new building of traders with unlimited amounts of funds to intervene in markets. So we can look for, and of course it has to, because now the sums are getting so enormous,
Yeah.
and the distortions they've brought into the markets are so great that they now need just a whole nother building full of people to help them continue to do their dirty deeds.
Hmm.
Then what I'd like to go to is the LTRO.
Yeah.
And, in a heartbeat on Wednesday, they printed in dollar terms $700 billion. It was
Wow.
like 550 billion euro. And, the ECB's balance sheet now is at all-time highs. You can see that the Spanish and Italian banks have gone heavily into the carry trade, but they're buying toxic assets.
Hmm.
And if you really are looking at what's going on, is these countries can't get the interest rates they want on the long end, so they're getting more and more into the shorter durations,
Hmm.
which is basically turning their debt into what I'll call adjustable rate mortgages.
Right.
And these are just new debts that they've got to do to, just keep the whole thing going. But they're still unpayable and inextinguishable.
I'm sure of that. No
And so,
question.
you know, um, and of course, who's going to roll over their longer term debt over there, because, the ECB has very clearly subordinated everybody.
Oh, yeah.
And, this is really just allowing banks to put more toxic assets. And then, of course, a good portion of it was banks just rolling over the money they need to roll over their maturity
Hmm.
walls this year that, of course, they don't have the money to pay back.
Right.
So at least they can roll it, because they wouldn't have been able to roll it with the private sector. They roll it with the
Hmm.
ECB and kick the can down the road some more.
Yeah.
And then last but not least, there was, before it was like 500 banks, now it was 800.
Hmm. I saw that.
And over half of them, over 400,
Hmm.
were into that bastion of stability called Germany.
Really.
And so, it was all the small German banks, but now the ECB is the senior creditor on those loans rather than the bank.
Right.
The bank is now subordinated to lending they've made to private
Hmm.
people. So
Yep.
basically, the whole, most of the European banking system, or a good portion of it, has been nationalized.
Yeah. Great. What a shock that is, huh? Because that was what it was heading for anyway, because the banks have been insolvent for longer than anyone wants to admit. And that's the way it is.
Oh, it's just amazing. And running the carry trade with these toxic assets is just it's just deepening the pool of the ultimate insolvency.
Yeah.
And of course, Kerry, if they just put in mark-to-market rules, everything in both the United States and Europe would tomorrow morning be, in insolvency.
Oh, yeah.
I was reading this week about they were looking for a manager to either South Dakota's or North Dakota's pension fund. And they put right in the ad, if you have any idea of marking our pension portfolio to market, just don't even apply.
Really? Oh, my God. That's amazing.
Can't make this stuff up, but it's just amazing.
Yeah.
But these, the LTRO, and of course they said that's going to be the last one. I'm going to make a prediction right now that it's not the last. It's just the second in a long line of them.
Uh-huh.
And many of the European people are getting the money,
Mm-hmm.
and instead of buying sovereign debt of their own country,
Yeah.
they're buying U.S. debt.
Uh-huh.
Okay, because they trust it a little bit more.
A little bit.
And, people talk about, Euro bonds and that sort of thing. Well, you have to understand that when they print a euro, that's a euro bond. That's an IOU. That's a call that they're issuing euro bonds. They issued 700 billion of them this week. Okay.
Amazing.
And you have to remember that the euro is the only currency in the world where it has no tax base behind it. It has no army behind it. And, I'll call it a Keynesian dream.
Mm-hmm.
So we, have seen now in the last month between the two LTROs, about 1.4 trillion injected into the world economy.
Not bad.
Of course, that doesn't include the Bank of England's monetization, which we spoke about last week, the Japanese central bank, and the unconventional things these banks are buying is just expanding so quick. In fact, Kerry, the Israeli central bank is moving part of their reserves into U.S. stocks.
I saw that, yeah.
And, because the Fed's prohibited from buying U.S. stocks, but there's no prohibition of them giving the money to another central bank and letting them do it. It's
crazy. Totally nuts. Well, we got to wrap up, Ty. So where do we find you on the internet again?
Well, I'm at traderview.com, but the new website, tedbits.com, will be open between now and when we talk next Friday.
Excellent.
It's going to, have our weekly interviews here, but I do a tremendous amount of homework, and I'm going to be posting daily remarks. I'm going to be doing recommended reading that I put up that I find every day. I'll be doing, all sorts of stuff. I've got I think a power-packed lineup of RSS feeds there that I believe are, there's not a whole lot of chaff in there. They're all pretty darn good. It's pretty much people that tell the truth. There's a few paper boys in there. Keynesians, but we need to know what the opposition is doing, and the elites, and there's lots of people you read just to see the trial balloons.
Yeah.
And so I'm going to be having some of that stuff in there, and it'll be a membership-only site or a subscriber-only site, but subscriptions are free. And
like the best things in life.
Well, I'll call it the subscriptions are free as long as I pick up a few customers along the way.
Yeah, you'll get them. There's no question about that, because the information you're providing really has value. It can really help people to get a handle on exactly what's going on, because what we've been talking about is a conspiracy, and I believe it's a conspiracy, nothing short of stripping every citizen of the world of their hard-earned wealth that they've spent lifetimes accruing. And if you don't prepare now, you're going to lose it. There's not even a question about it. It will be gone. So
I'll take it farther than that.
Mm-hmm.
This is, do you serve government, or do they serve you? This is the issue between slavery and freedom.
Yeah. Hey, we've been talking about that for a long time. Who is supreme? Is the individual sovereign? and rights, individual rights superior to those of the state, or does the state carry the day and you're just a vessel? You're just a serf, and you serve the state and you produce your tax payments, and that's it.
For them, not for them to, and we are at that stage, and especially in Europe with, Brussels is completely virtually unelected, unaccountable bureaucracy run by hardcore socialists who are really putting in place these people as debt slaves.
Totally. And we're well on our way. That's why they're after gold and silver, because that's salvation from debt servitude. Anyway, Ty, hey, till next week, we'll touch in with you then. Have a prosperous week ahead.
Have a great day.